Hey everybody, thanks for joining us here, and we will be going live in about 30 minutes with Anne-Marie Baiynd. I'm your host, Jonathan Mallard, so stick around and we will see you soon. Happy Thursday to everyone. If you're in the United States, we're going into a holiday weekend for Memorial Day coming up, and I hope you've had a great week so far. I'm really looking forward to this session with Anne-Marie here, and it should be very informative. We will have a stock pick for you guys today. We'll be talking about the energy super cycle and how that affects the way we think about the market, and then we'll show you how to use options to protect your downside, protect your portfolio while taking advantage of these opportunities, and we'll show you how we've done that historically and how you can take advantage of that in the future. So it's getting a little warmer here in Detroit, so that is welcome. Let me know where you're tuning in from. I see Stanley. Let's go, Stanley. I see you in the chat. Welcome. We should have a bunch of people joining us today. I see Allie, Annabelle, Demir, David, Debbie, Frank, Hazel Ann, Joe, John, Keith, Kingsford. Hey, what's up, Kingsford? I remember talking on the phone. Keith, Mian, Miriam, Nancy, Nasky, Raj, Satish. Let me know what you want to talk about today. If there are any tickers that you've been trading, we might have a chance to get to some of those with Anne-Marie. Where are you tuning in from? You guys all hear me okay? We're good to go? All right. So, Long Island. Awesome. Welcome, David. Okay, I'll go make sure everything is good to go with Anne-Marie. Get out your pens and paper or whatever you use to take notes, and I'll see you in a minute. Well, hello everyone and good afternoon. We are ready to get started here with Benzinga Pro and Anne-Marie Baiynd. I'm Jonathan Mallard, one of your hosts, and Anne-Marie is in the room as well. Can you hear me okay, Anne-Marie?
I can, but I need to reset my audio.
Okay, well, I'll let you take care of that while I just get the party started here. I'm going to go ahead and bring Benzinga Pro onto the screen and welcome everybody who's tuning in. And so today, what we have for you is another series of another episode in our options masterclass with Anne-Marie Baiynd. And we're going to be talking today about an energy super cycle and how that affects the market. We're going to give you a stock pick for today and how you can leverage options both to take advantage of trading opportunities in this market while protecting your portfolio and the downside risk of any trade. So buckle up, get ready to go. I see you, Sandeep, in the chat. Someone else, I have to kick them out because they're spamming the chat. Too bad. And then there's a bunch of people on Zoom as well. If you are tuning in on YouTube, go ahead, smash that like button and subscribe. Show us some love. It helps us to get the word out. And you guys should all be able to see my screen for Benzinga Pro. So Anne-Marie, feel free to interrupt me at any time whenever the audio gets reconnected. But as you can see here, you can follow along at pro.benzinga.com. We will have some surprises for you later on today, aka sale for Memorial Day, all that good stuff, and some new stuff that we've never done before. But you can get free access at pro.benzinga.com and follow along. And welcome, Alfredo. I see you in the chat as well. So what we have here is the chat room with Anne-Marie where she posts some of her trades, but we're going to go over here to the movers tool and the news. So I'm opening those up and I'm going to filter these by different sectors. So as we're talking about what's going on at big picture, right? The whole market has been very volatile, but there's still opportunities depending on your macro thesis in different areas. And so I can go over here to the entire session and then filter by sectors, and I could say, oh, what's going on with energy? Okay, so we can see gainers and losers. Here are a whole bunch of energy stocks that are up for today, and then I could collapse these filters and just start taking a look at some of these charts. So I might click on the chart and then click on, it's on the day chart. So looks like this is a penny stock that spiked a while back and now it's just having a little bump up. But we'll be able to get into some of these trends with Anne-Marie and where there might be some good opportunities with energy or agriculture and other sectors like that. Then we can also set our news to look for those sectors. So I could open up my screener and then look at the sectors. And so I could just tell my system, oh, just show me news on those energy stocks. And click done. And now I'm getting all of the real-time news and we're good to go. All right, welcome, Ree. Glad to have you here. J-Man's asking about D's, D-E-E-Z. And awesome, Alfredo. Glad to have you joining us for the first time, and welcome, Charles, as well. All right, how are we doing, Anne-Marie?
We're doing good. I just got things together, and hopefully you can hear me all right.
Yep, loud and clear.
Okay, fantastic. Fantastic. Thank you so much, everyone, for joining us today. I think it's really great that we get to spend time together. We're going to be learning about a lot of things that I think are super important for traders right now that really are maybe a little nervous about what they're seeing in the market. And so I've been doing this for about 20 years. And one of the things I know is that we move in cycles. Price action moves in cycles. And we've been coming off one of the most fantastic up cycles that I have ever seen. Actually, those of us that have been trading for many, many years have never seen price action like we've seen over the last year and a half, particularly. And that has been very easy for the newer trader to pop in and just go, hey, I'm going to buy this. It's moving up. But what happens is cycles. And so when we have a platform like Benzinga, the goal of the Benzinga platform is to help us understand that we do move in these cycle spaces. And what Johnson has up for us is the SPY, and we're looking at a weekly chart. And we can see for a long time it really went straight up. And so if you just had the patience of a couple of weeks, literally everything you bought went straight up. But about September, things started to crack, and they started to crack because some very important macro events. And those macro events are things that you can really keep track of from that Benzinga platform. And one of the main reasons that I've been able to move with the market in very successful ways is because I keep track of the news and important cycles that we didn't feel so important in times past. But as we move into a new regime of strength, we need a platform like this to keep us connected. And that's one of the reasons that I choose to make time and come on with Benzinga. And so what we notice here in Spiders is that right about September, we had a little dip. It's the first real dip that we saw in SPY. If you go over to the September space, yep, September's right there, right? That region right there, something very important with the macro universe came to pass, and that was the Fed began to talk about quantitative tightening. So one of the things that we learn when we're looking at our platform and we're saying, hey, listen, what is the news? You listen to the news and then you watch the market, right? And so the reason I said, hey, listen, on the Benzinga platform, tomorrow we've got the FOMC minutes. Let's see how everyone relates to this and see how they feel about this. And then we'll be able to set up some trades. And so one of the other things that I want to share with you is that traders feel differently depending on whatever else is going on in the big market picture. And so in the big market picture, those running very large portfolios and particularly commercial banks, which benefit from FOMC money, right? When the Federal Open Market Committee has something like quantitative easing, what they actually do is increase bank reserves. We only get money that comes in a check from a stimulus, whatever that happens to be. I think there were a lot of stimulus checks coming out to different people over the last couple of years. When those stimulus checks come to folks, they get printed by the government. So the government gets money to us, but the FOMC, when they manage quantitative easing and quantitative tightening, that money opens up bank reserves, and those bank reserves really get used by large commercial companies. So that ends up being sort of free money for them, because it's almost as good as cash, because let's cross our fingers, the federal government is not about to default on its loans anytime soon. Now, that may change over time, but we'll see what happens. So, long story short, when that seismic shift began in September, you'll notice that a lot of high flyers just went off the rails. They absolutely started losing money. Everything that had price to book earnings of 100, of 90, of whatever it is, something huge, everybody started selling off. And so these sorts of things happen. Now that we're looking at SPY, we notice that the chart action is now downward. It never looked like this any time last year. And so what we are seeing this week is the first bounce that we've had in 7 weeks. We've had 7 downside weeks, and that also has not occurred since 2008. No, maybe, how many down weeks did we have in 2020 when we had the COVID scare? I think it was only down 3 or 4 weeks. It's right there. 1, 2, 3, 4, back, stop, right there. What is that? That looks like 1, 2, 3, 4, 5 weeks.
5 weeks.
Yeah, 5 weeks. So we haven't had 7 down weeks since 2008, and that was at the GFC, the great financial crisis. And wouldn't you know it, that was where liquidity just absolutely fell off a cliff. Everybody thought we were doing really great, and then the wheels came off the bus. So one of the things I'm going to tell you is that there are a lot of opportunities in the market. Where we find them are in different places, and that's because traders respond differently in different regimes of macro focus. So right now, the macro focus is quantitative tightening, and what that shifts us to is away from high-flying stocks that were moving straight up into stocks that have value over the long haul and have likely forward earnings, because remember, the market is a forward pricing mechanism. So how does that help us today? What do we do today when we look at the chart? So what I want to do is share with you what I did when we took a trade on May 11th. So let's go to our feed that shows the chat box. We'll whiten it a little bit so that we can see. Yep. And let's go to May 11th. All right. So we'll go to May 11th, and we will notice that I put a string of trades on May 11th. And so what I'm going to do after he gets to that, there's May 10, and here is May 11th, right here. We have a huge stack of them, right? The one we want to talk about today is RRC. So the question is always going to be the following. In the current market space, if I take a trade, where will that trade need to be positioned if I go over the long or the short haul? So here's what I'm going to do. I'm going to take the screen, and I'm going to start with screen 1. Nope, that's not screen 1. I don't want screen 1. Screen 3. That's what I want. Okay. Want to make sure that you can see that screen. Let me know. Can you see that screen? Meeting controls. What just happened? You are sharing the screen. Okay.
Sorry about that. My computer went crazy, but yes, we can see your screen.
Perfect. All right. So we can see the screen. And so here's range resources. Now, here is what I know. Because of the studying that I do, one of the things you can be absolutely sure of when I look at a chart is that I am looking at a macro view and the view of how traders think the markets are going at the particular time. So one of the big macro views that I have is that we are in a super cycle of commodities. So what might those commodities be? Soft commodities are going to move for quite a while, and a soft commodity is anything that you consume, anything that you eat, okay? So that's going to be, you name it. And there's a commodity that's being traded there. The next commodity is a hard commodity, and that is a commodity that you consume, but not really by eating. Okay. And so those things are oil, lumber, metals, all kinds of things that you use to create other products. All right. And so we are in a super cycle. Now, one of the things I talk to people about all the time is I talk to them about the super cycle, how it ought to work, how all of that's supposed to go. And the big thing that I get is, well, hasn't it run enough? So take a peek over here at Range Resources. It came aboard just after the dot-com bubble, and right here in this edge is where Range Resources took off. And this chart moved all the way up and then all the way back down, which is really incredible, to go from $1 to $95 back to $1. That's huge. But they've also fixed a lot of the problems that they've had in this particular trench that they had here. Did way too much with natural gas in the wrong places to expand. A lot of foreign policy and the squeeze around natural gas back in the 2010 region really started putting a hurt on this one, and then we moved back up. But right now, it's on the road to recovery. So on May 11th, I said, hey, listen, let's take a trade. So the trade that I said was, we were sitting somewhere around 30. The trade that I said was, hey, listen, we've got ourselves a bounce back. And so this chart is going to move up, but it's got a fair amount of resistance here. So I suspect that it moves up and it pulls back, but it really doesn't lose a ton or make a ton through the summer months. That was my premise. Now, if you were here the last time, you've got to remember this. What I said was, how do you know you're in a good stock that's got a good trend that you can play? And so today we're talking about uptrends, all right? Because we are in the macro environment of the super cycle of commodities, of which oil and well-run oil companies are going to do well in this space. So one of the biggest ones that is increasing in institutional ownership is RRC. Now have a peek at this. At the beginning of 2020, they reported 8 cents. Then they reported 4 cents, and these are earnings per share. They lost 10 cents and then 5 cents. Look at what's happened since the beginning of 2021. They went to 2 cents to 30 cents, stayed around that 30 cents, dipped a little bit, but then went to 50 cents, 96 cents, 118. This is what you want to see if you're looking at macro environments for strong stock. So this one's been really running really far for a while. Now you might look at it and go, holy cow, that went from 161 all the way to 35 in, less than 2 years. But look at how much it ran. So it's got precedent in the past of knowing that it can run. So we're going to be trading this in all kinds of ways during up cycles and down cycles through the space for RRC. So you'll notice that it's stalling here about 35, but I'm above the quarterly formations, up. Remember, am I above this moving average? One of the things that we're going to share with you is this space so that you can do exactly what I do when I'm looking at the chart. And so we've got upside, yes, on the quarter. So I'm sitting above my moving average and it's up. Then I want to go to the monthly. I'm above my moving average and it's sloping up. I want to look at the weekly. Now, notice I put this trade out on this week. It was a red week, right? So you might say, Anne-Marie, didn't you just say that it needs to be up above the moving averages before I take that trade? Yes, ideally. However, if you're doing old resistance to new support and it bounces, you know you've got a shot. So for me, I said, hey, listen, we're going to take it here just outside the money because we picked the 30 strike, and we looked at that and I said, hey, listen, if it drops to 24, we're probably going to lose about 25 to 30% of that option. We're just going to go ahead and get out of it because the price is telling us that it had no business falling, right? My thought was, here, it's either going to hold. If it holds, I'm going to make good money. If it fails, I'm getting out. And that's where a good trade sits. That's how we're going to see it in the option space. For the day, it had the same sort of thing, right? So look at the 12th or the 11th, 9, 10, 11. So on the 11th, what did I see? I saw a test of support. The very next day on the 10th, I saw it holding that support. So on the 11th, off the bounce, I said, it's time to take this trade. And that's why we took it. And so from here to here, we've had a very, very good trade, right? This chart is up more than, golly, it's up more than 30%. Okay, so this chart overall is up huge over the year. But here's something else. Let's say you waited and you went in here. You literally would have gotten it within the same amount of pennies. I think the price might have been 3 or 4 cents more. Okay, so yes, if it comes up over the daily and everything else is moving nicely, that's why we have the second moving average right there. If you look at it on the weekly, you can see it's got some wiggles, but price action is holding. That's what made me go, hey, let's take September as the chain. So what I want to show you is this image, and I am going to move it here.
And by the way, just really quick, is that the 6 simple moving average on that white line?
Yes, it is. It is.
And then what's the
6.
yellow one?
The yellow one is the 30.
So it's the 6 and the 30, just for anyone who is asking in the chat. That's for
Yes.
you, Daniel.
Okay, so now let's take a look at this. RC. Okay, oops, wrong one. Okay, so I took a picture of this today, and what I'm going to do is expand it because I want to go over a couple of different things. In the chain, you can see looking at the bottom, and I'm going to use, let's see what kind of highlight. Oops. Let's see what kind of highlighter I want. You know what? I'll use this. I will use the Spotlight tool, and I will use something like this. Okay, so here is the spotlight. Hopefully you can see that. Let me see if I can increase that just a bit more. Stop my mouse. Let's increase it a little bit more. Hello, cancel. Let's try to do the increasing first. What are we going to see? Yeah, we're going to see this. Okay, so now I'm going to use the annotation tool, and instead of the spotlight, I will use the marker and with a big width. Yeah. Okay, great. So first of all, this is the butterfly that I did for September. Okay. Now, many of us are a little bit queasy about doing a complex trade like this. So the first thing I want to show you is why, okay? So when I took this snapshot, I paid 60 cents for this, and you can see that by scrolling in the trades for Benzinga on my tab. And then we're going to see that we get exposure at the 30 strike. See, it's going for, it was going for 558 at the time. So we got exposure to that 30 strike, but we paid only $1.15 to do that. Now, if I go right now to the September 30 strike, which is this one right here, it is $8.50. If I wanted to hang on to this trade until it gets into September, if I wanted to do that with just a call, it would cost me $850 per option. So now that tells me, hey, if it goes to 100, that's great. But see, here's the difference. We are not in a macro environment that allows trades to run like the wind the way they used to. We simply are not. The macro environment has changed. And because the macro environment has changed, what we want to do is decrease our exposure. And so the way we decrease our exposure is by selling something so that we can have money that comes from outside of our account. So over here, this is the butterfly. You can see that I bought one and I sold one, and then I sold another one and I bought one. So really what we are looking at is a long call spread and a short call spread. Now, because I jammed them together and we use one strike in the middle, it allows me to have a complete bounded risk, which means that I'm going to pay $1.15. And no matter if this stock goes to $5 or $105, my exposure from a risk perspective only stays at the $1.15. So the why that I want us to put in these spreads is because of the macro environment that says, listen, things are a little bit sketchy right now. And so one, we are going to find high flyers that are having nice monthly and weekly moving averages overall. And we're going to trade with a bounded risk so that if anything happens, we make a certain amount and we lose a certain amount, okay? So a lot of trades are getting broken, flat out busted, because we think that the market is doing this. And it's not. It's doing this. And so because the market is doing that, we have to adjust. Here's something else the traders have a real problem with, and I used to be one of them. We trade and something works. Okay, if I buy it over here, it works every single time. Works every single time. And then all of a sudden, it doesn't. And it takes us a long time to figure out, holy cow, what I used to working anymore. And so the way that I always do this, and I want to show you right now how important this is, I am always looking at a chart and looking at the broad market. Let's look at SPY. And I'm looking at it on the weekly. And when it starts closing candlesticks under the weekly, I say to myself, look out, I could have a problem ahead. So I want to make sure that I know where my support is. And so for 3-4 weeks, it kept wicking and then holding and then wicking and then holding. And so my thought was, hey, if it falls down here, we're going to have some real trouble at the first pass. And so guess what? It held and I could go long again. And then it stopped going higher. That's something else that you need to worry about when something stops going higher and something stops going lower. We're going to talk about this. We're probably going to put a couple of trades on today that are based on these live mechanics. And again, when it starts closing under there, I go, all right, where is my support? And worst support to break, if you're looking for a long, is old resistance. Here, it held it. It tested it, but it didn't close there. Here, it held it, popped up, couldn't go higher. Held it, popped up, went higher, immediately failed. The moment it loses this, folks, any bounce that does not recover, it's trouble. Look, as it loses the edge, we can go, okay, I'm going to find support. It's not going lower. That means they found support. The only reason something stops going lower is because it's found support. And so if we look at this and we go down, we go, oh, look at that. And it starts moving again. You're okay to go long. We know, hey, it's going to find support. Here's my first support. It's back over here. Wow. If I bounce, but my old support becomes new resistance, just like my old resistance became new support, it fell right through. That support becomes resistance. If I can't close over there and I am under a downward moving average, trouble. So we've been looking at short action ever since that happened. We had a couple of weeks where we were able to go long, and then everything else has just been falling off a cliff. Now, we've got something super important happening here. We've stopped heading lower. Today, which is the Thursday of the week, we are well above the lows. So something's happening. This is what the month opened up at. If we can get up here and close over the month, we should be able to bounce for a couple more weeks, just like we did here. Just like we did here. We could bounce very nicely. Where would we be moving up? First place, old support, right? That's right around here, really. It's the 403 area. As long as we close this week around this area on the SPY, we'll be in good shape. So we've got this 403 here, and then we've got 412. So this is really where I think we're going. So we're going to think about how can we strategize on a trade that will give us upside pressure to get into this area, but we don't have to pay a lot for it. And right now, volatility still is pricing a lot in the space. So that's what I do. Let's go to RRC one more time. And then what we're going to do is sort of look at this and go, all right, all of a sudden it's falling right back down. Now, I knew it would have trouble at 35. Why? Well, I'll review that again. Let me show you. It's going to have trouble there because, oh, for heaven's sakes. Because this area right around here at this 35 zone, we spent, take a look, this is a monthly group of candlesticks. 1, 2, 3, 4, 5 months. It took us right at this edge, 5 months. And then it broke down some more. So right now, we're sitting at the same price, but the traders feel completely different about it. So you might go, why? Why do they feel different? And if they feel different, why aren't they going higher? Well, people down here said, hey, listen, I'm going to sell this pressure event. I'm going to take some profit because I know that people are going to try and sell it off. They tried to sell it off last month. Here they are coming in again. If they sell it off again, there's going to be a brand new trade to open up to the long side. All right. So the trade we have in process is the butterfly. So we're going to put on a slurry of different trades. And I'm going to show you this and take the snapshots again so that you can see it and you feel comfortable about what you want to do. All right. So here is September. 30 is deep in the money, right? There's already 1,500 contracts sitting right here. And so the cost of the 30 right now is $760 because the price is moving down off of the highs of the day, which is what I expected to have happen. So I'm going to erase all this except my butterfly. And I'm going to say, hey, listen, if you want to take this trade 30 to 35, right? It's going to cost you $2.60. And let me expand that in a capture screen so we can look at this all through. If you say, hey, listen, you know what, I want to learn how this butterfly works, I urge you to do it. Listen, we'll do it in small steps so that we can understand what's going on. All right. So remember, last time we said, hey, when we buy a call, we get a right. And so when we buy the call, we get the right to purchase the stock at $30. If it's going at $70 or if it's going at $20. Now, if it's going at $20, I really don't want to buy it because I don't want to exercise my 30 call because I could buy it cheaper at the market. But if you look down here, you're going to see the 30 I'm buying here. Look over to this area. Let me use my vanishing pen again, which I love the vanishing pen. So, whoopsie. I'm long one at 30, and I am short one at 35. That means I have between $30 and $35 to collect an amount of profit. So that is $5. Okay? Now, vanishing pen is not good for math, but exercise that mind there. So if I pay $2.60 for this, the most I'm going to be able to make is $2.40 because $2.40 plus $2.60 makes $5. Now, let's go here to my butterfly. I'm going to pay right now at 73 cents. Okay? Friday it was $1.15. Actually, this morning was $1.15 because the price action was up at, $35.90 or something like that. If I bought this right now, it would only cost me 73 cents, and the maximum I could make is still the $5 minus how much I paid for it. So I get to make $4.27 if this goes all the way to the top. All right. So there's huge upside. So the question is, well, what's the downside, Anne-Marie? Because anytime you trade with an option or anything in particular, and it helps you manage your risk, there's always a flip side that is going to come into that space. So what is the flip side? The flip side is if this butterfly goes all the way in the money, that means the 30 is in the money, the 35 is in the money, and the 40 is in the money. This is what I'm going to lose. Okay? Now you might go, why would I lose if everything's in the money? So here's how that works. If I am long the call, That's long the 30 and short the 35. I get to make the $5 in between that, less what I paid for it, so $4.27. If this goes short the call, long the call, remember, when I sell a call, I create an obligation. And that obligation is to surrender or sell my stock that I have or that I have secured. Well, I secured it at $40, but I am obliged to sell it or obligated to sell it at 35 if it goes in the money. So I have the stock to sell, but it's at a $5 difference. Now, normally, if I just sold the 35-40 spread, I would have to pay to get out of this trade if it went all the way into the money. All right, because I wouldn't get a full credit for it if I sold it. Why would you want to sell something like that, right? Instead, I get to use this strike at 30 and this strike at 40. And wouldn't you know it, 30 plus 40 divided by 2 is 35. So it's a break even if everything goes in the money and this is all I lose. Okay, so for here, if it continues to move up, I make $2.40. If it continues to move up here, I make $4.27 until it starts moving up 35. And then it starts chipping away at my $4.27 until I get all the way to 40, and then it eats this part up. And that's how you have bounded risk, math term, okay? So that's why we use the butterfly, because it's always using somebody else's money. And that allows us to get exposed at the same strike, but with a totally different risk profile. It allows us to make more when the getting is good. Okay, so that's the reason that we do that. Let's now close this and think about what we might want to do with the next group. So let's say you're thinking to yourself, wait a minute, this is all the way down at 30 and the price action is all the way up here at 34. What if I chose a different set of strikes? How would that trade look? So now I'm going to erase this. I'm going to leave my butterfly there. But now I'm going to say, hey, I'm going to buy the 35. Why? Because there's volume sitting there. Okay. So I'm going to buy the 35. And I'm going to, wow, that makes the math just a little bit clunkier. All right. I'm going to sell the 40. Okay. Now, I don't know if you can see this, but if I buy the 35-40 calls, take another snapshot of it so we can expand that picture. All right. There we go. Expand. Okay. So here's a potential trade if you want to take it, because it's all the way up at 35. The 35-40, I buy the 35 and I sell the 40. You'll see it BTO or STO, 35-40. That would be $1.80. Okay. Now, that's still, now notice, this is September. That's still 35-40. It's still more than twice the cost of my butterfly here in September. And that butterfly exposes me at a much deeper in the money call. And so you can see that, hey, if I could buy that butterfly, I could really buy 2 butterflies and expose myself to the same amount of risk, but instead I would be controlling 200 shares instead of just 100. So the profit ratio for the same exposure would be twice as much, right? Yes, Jonathan.
Anne-Marie, and the max loss for both of these trades is the cost of the trade, right? The 80
That's
cents
correct.
180.
Yes.
So Nasky, that's the
Yes.
answer for both of these trades. In this case, the max that you can lose is what you paid for them.
Yes.
Which is why
exactly.
I love this, because in all of the craziness of the market, it's great because you know exactly how much you're risking.
Exactly. And it's never, I will never allow, I won't say never, I rarely will allow an option or an option group to go to zero. If it slips below a price region that I believe it ought to hold, I'm immediately going to start watching it. And if it continues down, I'm going to say we need to cut and run. And that's usually no more than 50%. So my stop would really be, hey, listen, this has come into 40. I'm going to close it for me. You can do whatever you like, but I'm closing it for me. Okay. And so that is something that you can obviously do on your own. So, but I will rarely allow something to just dribble away and lose all you have, because there's something there that says, hey, listen, this is how you do it, right? You don't ever want to buy something and go, okay, I'm going to let it go to zero. That's just not good risk management. And the difference between amateur traders and professional ones like me that do this day in, day out for a living is we manage risk because we trade to eat. I can't let my investment go to zero, right? I have a house payment, right? And so you have to think about things from that perspective. Now, here's the next thing. Let's say that we go, all right, let's look at this option and we sell the 40s and we sell the 45s. So what is the thought process? The thought process is, wow, if those things actually filled at those prices, we would get in way cheaper than this butterfly, which is unusual. So there is a little bit of, for those of us that know anything about arbitrage, if we bought this call and then sold this call, we'd end up only paying 63 cents for the butterfly and it's going for 80. So that actually is, that's how you can find mispricing in the market. There's so many things you can do with options, folks. And I'm glad so many of us have committed to getting on board here, you know, when these things go to members only, as it were, and get to learn all this stuff together. It'll be really great that we'll be able to learn all these incredible nuggets. So why would I want to sell the 40-45 call? Well, I just mentioned it. I want to use somebody else's money to pay $1.75 for this call, right? I also don't expect price action to move straight to 40 or even to 45 because I believe the markets are going to be sideways until we get settled out, and then it might move higher in the long run. Okay, so that being said, when I buy 175 and I sell 112, this money is coming in, that money is going out. So 175 is going out, 112 is coming in. Use your Zoom feature. If not, I'll take another picture. Go. And I know we're running kind of long for me, but hopefully you're getting something out of this. So let's do this. All right, do it again. So here's what I'm talking to you about when you use these butterflies. The price of a butterfly will be For a long butterfly, which is all we will do, I will never expose us to risk on the short butterflies. For the long butterfly, I will buy and sell. The red means I've sold it. The green means I bought it. I subtract the two. It should be the price here, but it's not. It's actually different. And so there's arbitrage here that can work out in our favor if we buy the call and then if we buy the call spread and then sell the call spread, provided we get it at these prices right here. So I like that, actually. I think that's pretty great.
And great question here from Marina, really quick. At what price, what is the optimal price for the max profit on the butterfly? Is it the 40?
Optimal price? That's a hard question. The optimal price would be a penny. So you might think you would want to get it at 40 cents and you could try it. You might never get it. So that's really, if you said, hey, listen, I'm going to try to get this for half the price, you could put it in there and put GTC.
Oh, I miscommunicated. I think they meant the price of the stock. Like where do you want the price of the stock to land to make the most on the butterfly spread?
For the current butterfly I have here, for the new one I'm setting out, yes, the answer is 40.
Thanks.
The answer is 40. That's the ideal price. That's going to make you the max. Now, what happens is as we get closer to expiration, we'll talk about how we're going to get out of this trade, especially if it continues to run. My thought is that we should have a little bit of back and forth. There are a lot of people that go, yeah, man, this is selling off. There's no way we close a week green after everything that's going on. But you and I both know if we're sitting on the screen, if we're sitting looking at our screens today and things are green, there's part of us that's going, oh, all right, well, maybe we aren't going to, wearing a handbasket. So from that perspective, there's a lot of desire in the market for price action to move up. Oh, look, see, it's shifting right in front of us. Now it's shifted again. It went from 180 to 107, so now it's 73. They'll squeeze that arbitrage pretty tight. See, it was at 80 a minute ago. Now it's at 75. So they're closing that arb. And big companies like Renaissance Capital, like just companies that work specifically with option chains, they have computer programs that find this arbitrage and exploit it. And so that happens when you're seeing, more open interest than other. All right, something else, if you're looking at, we'll do two more things. I'll show you one more NTCT. Oops. A lot of people are very interested in this particular stock. Here's my thought. What I want to see is something running continuously upward. Okay, so these guys are obviously, they'll have up and then down a quarter and then up a quarter and up another quarter and then down a quarter and down a quarter and up a quarter and up another quarter and then down a quarter. So this one doesn't run nearly as beautiful as RRC, but it is a very pretty chart. So for those of you who like to trade the stock action perspective, this is a chart that you can say, hey, listen, I want an alert put on my Benzinga platform for you to tell me anytime there's news coming out on this particular stock and what's coming on. I've got some news alerts set for this one. And when it comes into a very specific price that I'm looking at, we're going to put some trades on. So that's coming in the future. Just wanted to tell you this is what I was looking at. Is it a buy now? I do not believe it is. Hint, hint. But what I'm going to do will leave as a teaser for the weeks and months ahead. Let's take a look right now at SPY. What we're going to do is set up a trade on the fly, that SPY on the fly, that's going to hold a certain weight. So remember, when I first started talking, I said, hey, listen, you know, we're running into a space where we could have a couple of problems. So let's go to the 4-hour chart. 4-hour chart shows, you know, it hit the opening tick of just a couple of weeks ago, selling off at the edge. But let's take a look at what's going on. What is the slope of the moving average here? It's upward. What is the slope of the daily? It's down to flat. Okay, so slope of the weekly, down to flat. Slope of the monthly, down. Okay, so to review, we've got the weekly, down, yeah, not down to flat at all. So down, and then the monthly, down. Everything tells us, hey, listen, this is a downward formation. So the question is, all right, Anne-Marie, it's a downward formation, but if I look at my 4-hour, it looks pretty upward. And if I look at my 30-minute, it's also pretty upward. So we're sitting right at the resistance area. So what does this tell us? This tells us two things, okay? It tells us that we can't move up and we're holding sideways. Now, if a chart holds sideways and moves up into an area, it has a tendency to break to the north, all else equal, if it's in an upward moving average formation, okay? And we talked about that upward being the 412 area. That's where it might go, all right? Now, if, however, it's in a state where it needs to retest support before it breaks out again, all right? So let's take a look in this environment. Let's take a look at the things that happen when bullish pressure shows up. All right, so bullish pressure here gives us more bullish pressure there. And then we have a fade, a more bullish gives us more bullish, gives us more bullish, gives us more bullish. So it tells us if we fade, we're likely to bounce. Okay, so that's the first premise. We're going to trade on the premise of if we fade, we'll eventually bounce. So how does that trade look? Well, we're going to look at the trade that expires tomorrow. Tomorrow, Anne-Marie? Yeah, tomorrow. Okay, that's the 27th. Okay, and so, oh, that's interesting. All right, so let's say we move up. If we move up to 412 by the end of tomorrow, that's 40 cents, okay? Now, if we think the target is 412, but we don't want to pay more than 40 cents, what about going to something like 410 and selling the 412? That way, if it gets to 412, we've made our $2. Well, this cost is going to be 43 cents. Okay? So 43 cents is all you have at risk. If it moves into 410 and higher, you're going to make you're going to double your money. If it moves all the way to 412, now when I say if it moves to 410, you're going to double your money, you need to close it by 12 o'clock in the afternoon because theta will eat you alive. Okay? You don't want to hold a chart into the close unless something is just rocketing up the side. So if you get the vertical 410, 412, you think it's going to 412, but you don't want to pay 40 cents. Well, then you go to 410, where you would normally have to pay 80 cents, but then it goes to 412 and you double your money or quadruple your money, really. If it goes to 410, this will be $1.50, right? Easily. If it goes to 410, it'll be $1.50. Even if it starts rising, you're going to make money, right? So this says, hey, listen, the faster it goes up into the money, the more likely it is I'm going to be able to buy. Now, let's say you're thinking to yourself, wait a second. I hear you, but you said that pullbacks are going to give me the buy zone. What if I want to trade a pullback that begins in the morning or overnight, and then I take it off as soon as it opens up, right? So where would it go? Well, it would go to old congestion, which is about 400, okay? We're going to use the same mechanic. Let's say we're looking at the other side. If we look at 401, it's 89 cents, 90 cents, right? But if I go to 403 and then I sell 401, it's 45 cents. So I get to make money if it falls just a little bit, and I get to make money if it falls a couple of bucks. If it goes all the way to 400, 401, and even lower, you get to make money. Okay? So if you want to understand how these spreads work, these are the cheap trades that you might want to buy, right? If you think it's going down, you're going to choose that spread. If you think it's going up, you're going to choose that spread, the call spread, or you could do both. And the great thing about doing both is that it allows you to make money if it goes down and if it goes up. So let's talk about how much money, okay? Now, I won't use the vanishing pen and torture you all. So I will use, how do I use a pen? Annotate, spotlight, eraser, spotlight. All right, I'll use that, whatever. All right, so here's our spotlight area, right? And so what we want to do is, let's use text. Yeah, perfect. Okay, so what we're going to do is the following. We're going to say, oh, for heaven's sakes, we're going to say 37 cents plus 48 cents. What is that? That's 85 cents, right? Yes. 85 cents if we buy both of these, okay? Now, we still have a difference of $2. So if it moves into our target, we get 85 cents minus $2 minus 85 cents, right? $2 is the difference, minus 85 cents. And we're able to make $1.15. Okay, and that's trading both sides. Now, remember, I always say there's always a flip side. So what is that flip side? Price could do nothing. If price does nothing, it's harder to make that money. It's impossible to make it if it absolutely does nothing and you go into expiration. But again, if you say, hey, listen, I'm going to let if it moves in one direction or another, sometimes it moves in both directions and you can do all kinds of crazy things. But if it doesn't, then you're sitting in a space where we go, all right, it is what it is. And we we're gonna just cut our losses. Maybe it might be 50%, maybe not. But what I would say is, listen, that's the trade where you go, hey, what's it gonna do? It could do both. It could do neither, and it could do one or the other, okay? And so this is a way for you to trade where you can make money on both sides or just one side if it absolutely moves. I love these kinds of trades. This is when we do something like this and we join it together, it's actually called a long iron condor, but we'll learn those things piece by piece. We'll start with this vertical, get you comfortable with understanding the vertical, and then we'll turn it into different spaces. What I want to do with us through this work of Moneyball, which is really all we do, in this Moneyball type of trade, I want you to understand how risk is managed and how your mind needs to shift to, hey, listen, I need to trade the probabilities. If I can trade the probabilities, I'm going to make money more often than not. Okay? So let's open it up to questions. Let's talk about a couple of different things, and then I'm going to turn it over to Jonathan. He's going to show you how you can set alerts for news following a stock that you want. Jonathan, if you'd like to take back the screen, take care of those sorts of things.
Well, just before I do that, what I love here is we're just talking about vertical spreads, right?
Yes.
So just you have two different vertical spreads, one for calls, one for puts, and voila, you just made an iron condor. So for any of you out there who are beginners, you're maybe still getting used to some of this terminology, it's not that crazy. We combined two vertical spreads in one way a few minutes ago, and it's a butterfly. We did it in a different way right here, and it's an iron condor. So if you just stick with us step by step, you can keep learning from Anne-Marie, and you can make money with these trades when she's posting them inside of Benzinga Pro. And yes, we are recording this, so we will send out that recording, BY. And then Kingsford says, thank you so much for the knowledge and for sharing. Jason and someone else earlier asked about knowing the process of closing the butterfly.
Oh, okay.
So closing those trades, depending on, I don't know how much time we have, but that's what's at the forefront of a lot of people's minds, whether it's a stop or for profit. They want to know how to close these trades.
Okay, so what I will do on the platform is I will say you want to put it in, as soon as you open it, you want to put it out to close. And so you want to cover the position. And so sometimes in your platform, it will say close this position, and you can click on close this position. Or you're going to do the reverse of what it is that you have. My thought is the easiest thing to do when you've got the butterfly or you've got the iron condor or the condor or the iron butterfly or all the different things that we're going to learn through the coming months in Benzinga Moneyball is that we are going to set them out and say, hey, listen, just the way you bought it, you want to do the reverse and put the price out there for it. We're not going to, hey, let's see how this goes. My job is going to be, hey, let's see if something's about to go wrong. I want to tell us, hey, you want to change that closing price to X, or you want to change that closing price to Y. That's really, that's really what you want to look for, that sort of thing. And so from that perspective, I would say Yeah, you just want to do the reverse and just give it the price you want it to go at. You want to go out at. And so I will be giving us those prices most of the time. Like I said, we can make 400 or 500% on these. Most of the time, we're going to make 100 to 150%. Sometimes we're going to make 30%. Sometimes we're going to make 60. We are not swinging for the fences. We want those dribbles up the first or the pop in the gap between first and second. And if we're lucky, we'll miss the shortstop will miss us and we'll get us a really nice move into the outfield between second and third. So from that perspective, that's how I want us to look at it. That's really how I want us to look at it.
Awesome. And keep in mind, everyone, opening and closing trades are posted inside of Benzinga Pro. I might go ahead and show that. But Anne-Marie, and will you be posting either of any of the trades that we talked about today in the system in terms of the SPY or
some version of them? I believe what I'm going to do is I'm going to put out a couple of butterflies. I will explain. It will be 2 vertical spreads, one between one and then the other. And that's what I think I'm going to put out in the next couple of moments. I want to give us a little more upside exposure in terms of the spread. So I want to use butterflies for that because I don't think we're going to run off the rails. I think we're going to fade and it's going to give us some nice price action in general. That's really what I'm going to go after.
Perfect. And so for everyone who's not already a subscriber, today we have 50% off of the whole year available. And I have something, even if you are a current subscriber, I have something that's never been available ever before. So is it all right if I go ahead and share my screen?
Please take over. I'm going to
cool.
be off and just watch for these trades inside of the Benzinga platform.
Awesome. So everybody show Anne-Marie some love. If you're in the YouTube chat, give us a like and subscribe, and thank you everyone who is on the Zoom as well. So I'm sharing my screen here, and so you should be able to see Benzinga Pro. And so this is where you want to see these trades. So we had an opening trade alert for DBA a little while back, and if I scroll up to the 11th, we were talking about the original trade on RRC. So you should see a new trade pop up soon for RRC right here within the Anne-Marie Baiynd trades chat. And then she also posts that information inside of the ideas tool, where you will find other ideas from Benzinga staff members, and then the experts like Anne-Marie or Nick Shaheen is in here. Matt Maley is in here. They have their own products with more advanced chat rooms and that type of thing. But at least here, you do get very concrete trades along with Anne-Marie's trades. So what's the deal? I'm going to move this down. Let's see here. I'm going to stop sharing my screen really quick. And I have to switch around. But basically, in addition to the 50% off, we have an actual lifetime deal where you sign up for a lifetime subscription, but now you can take up to 24 months to pay it off through our financing partner, Klarna. So basically, I have a QR code that anyone can use, and I'm gonna bring that up in a little bit here, but it's $4,000. Normally, we charge $7,000 for a lifetime membership to Benzinga Pro Essential Plan. $4,000. So that means you can get a lifetime subscription for less than our standard monthly cost. Basically, if you divide it by 24, somewhere around $160 per month is what you could do, and then you never have to pay us again after that's paid off. So pretty awesome opportunity. I can also combine this with any other subscriptions that you have with Benzinga, whether it's an inner circle, newsletters, whatever. We can mix and match and take care of a great lifetime deal for you, or you can just take advantage of that 50% off for Memorial Day. So I'm going to go ahead and post that in both of the chats here. Let's see, I'm bringing up Zoom. So that's that. And then posting that over here on YouTube. It's also in the description on YouTube. And then I will, I'm just going to go ahead and bring up the QR code as well. So right now, if you scan this QR code on your phone, let's see, can you guys all see that? If you scan this QR code, it'll take you to our Stripe invoice, basically, where it's $39.97 total for the lifetime subscription to all the tools on Benzinga Pro, including Anne-Marie's trades. And then you can get it down to as low as $170 a month for 24 months to pay that off. And then you never have to pay us again, and you get to keep it. So basically, yeah, it's a great financing option for a lifetime subscription to Benzinga Pro. Or you can use the code MEM22 for just $702 per year. If you have any questions, I'll throw my contact info into the chat. And she's great, isn't she? The whole point here is we're going to continue to bring all of you high quality education. We won't always make this public. So right now we want to get the word out here. We're making this public on YouTube, but in the future, this will not be public. It'll only be for subscribers. And it's just amazing being able to put these pieces of the puzzle together, right? You've got calls and puts, you have vertical spreads, butterflies, iron condors, and then you have Anne-Marie guiding you each step of the way for, okay, what is an optimal entry price? What are the charts telling us about the momentum and the trends on a daily, weekly, and monthly basis? And you have a combination of day trades, like short-term trades, sometimes they'll be overnight, compared to some of these longer swing trades that might go out a few months. Like I have one for September and October that she gave us earlier this week and last week. Keith, if you guys have any questions about the subscriptions, then just shoot me an email. I'm posting my contact info in both chats right now. If this thing just lets me, there we go. So posting that on that chat, and then Zoom, everyone, boom. So that's my phone number, that's my email. I am so excited because this way you guys get the highest quality services, but you don't have to break the bank. It's a great way to have flexibility in your payments, but still have the highest tier subscriptions to Benzinga's products. So what it'll look like is you log in here, and then you open up the chat. We actually moved the chat to the top here. So notice how, if I zoom this in a little bit, notice how the Squawk in the chat are at the top here. So we move them from this sidebar over on the left-hand side. So that's how you're going to open that up. Open chat. And then you want to choose Anne-Marie Baiynd trades. There's some other chat rooms that are available that are included with your subscription. So just include Anne-Marie Baiynd trades. And then like we were talking before, all of these other tools to research stocks, research sectors. You can have your watch list right here on Benzinga Pro and set alerts for those watch lists. And you can link your brokerage portfolio so that you have an active watch list for alerts on stocks that you care about. So yeah, you can see here I have a bunch of companies that I'm following. I can turn on sound alerts or real-time email alerts. And then I could filter some of these other tools like a news feed or a scanner. And I could tell the news feed, oh, you know what? I just want news on these companies. Click done. That's good to go. And then I can do the same thing over here on the scanner, where I just say, you know what? I only want to see out of these watch lists which companies are spiking today. So as you can see, there's a lot of flexibility. Today, we're getting more into the nitty gritty with how to execute options, how to recognize these super cycles for one. You know, we start with a top-down approach, right? Where we're looking at the big picture. What's going on in the overall market where stocks aren't going just straight up, but it's kind of moving sideways, moving up and down. And then where are the opportunities here that we can take advantage of, whether that's with soft commodities, hard commodities, and then hone in on particular companies that basically based off of price action, the charts, we know that there's some predictable support and resistance levels. Let's see, Hugo, Newsfeed, DEP. Oh, I'm on staff, and it's because it's a staff account. The news tool used to be called Newsfeed. So that's all you got to know. Just ignore that. You'll just see the news tool. And the difference is that you have way more filters now than used to be available. So the screener filter, the categories, so you can hone in on certain types of news items. That's really the difference there. But good question, Hugo. Hazeland did not understand how to hedge on the stock. So a lot of what we talked about, Hazeland, with the spreads, right? It's the fact that you have a limited risk. So there's a whole bunch of different ways to combine asset classes, whether if you want to buy the stock, you can do that. But stocks can go to zero. So technically, you have all of that risk, and it would cost a lot of money to control 100 shares. And so that's where what Anne-Marie was talking about, how can we actually use other people's money to control way more shares, but not have all that risk? And so that's where when you're buying and selling contracts, it's a way where you can limit the amount of money that you have to put into the trade, whether you're buying or selling a spread, so that actually you're using someone else's money through the brokerage to pay for part of your trade. And that's what's amazing here. So if you own shares, then you can hedge just by buying puts. But there's also ways to hedge your trades using various types of option spreads. So that's kind of what we're talking about here today, where if we open up the chat room again, let's see, open chat. We open, oh, here we go. Here we go. She's posting, guys, this is a great opportunity. If you feel comfortable with this, even if you don't feel comfortable with this, do it as a paper trade or something. So like I'm doing this right now and I'm not waiting because last time I waited until like I was done talking in another half an hour, and the prices completely changed. And Anne-Marie was totally right, and I missed out on a couple $100. So this is what we're looking at right now live. New trade alerts expire tomorrow, opens us up to both sides of motion. We want to look for 150% to 200% return, leave the stops at 70% loss. So disclaimer, all investments pose risk. So you could lose up to 70% you could lose 70% here if that's where you set your stops. But here's a butterfly, buy to open 5 weekly calls, sell to open 10 weekly calls, and then buy another 5. So this is a butterfly on the SPY for a 48-cent debit. And then we have another one from 404 to 396 for a 56-cent debit. So our goal is 150 to 200% return. And then we set our stops at a 70% loss. These trades are actually a combination of two spreads, so the butterflies are two vertical spreads. I will post the link here again. Thank you. Sorry, I don't want to mispronounce your name, but I'll just post a link. This is for the annual. That's 702 for the whole year. Normally it's 1404. Verma, this does not include access to Nick Sheen's Inner Circle chat room. We do have 50% off of his chat room available as well. Basically, some of you may have seen Nick Shaheen. I've done webinars with him. He offers a bit more in terms of he trades 9 hours a day. So you can trade with him kind of like we were doing here with Anne-Marie today. Well, he does it 9 hours a day, and he's calling out day trades. So if you're interested in the options mentorship program with Nick Shaheen, he also does a 2.5 hour charting session every weekend. And like I could click into his meeting right now, and this is what it looks like. I join the meeting. I have to mute this because I don't want him to start talking into my ears. But you can see there's a few hundred people in here, and then he shares his charts and calls out day trades and swing trades, and you can ask him questions pretty much from 8:45 a.m. Eastern time until 5 p.m. Eastern time. So you can see that he's sharing his charts and his trades here as well. So that is different. Shoot me an email if you want more info on the options mentorship, but that's $1,683 for the year instead of the $3,367. Or I can give you a lifetime on everything and finance it with Klarna. So great questions. Jason, so the second butterfly is a hedge. Let's take a look here. Let's go back to Anne-Marie Baiynd trades. So she's saying new trade alerts. It's a combination of two spreads. So the butterflies are two vertical spreads. Let's see. I'm gonna bring this out here. So we have butterflies at two different price strike levels. And then, did she post this twice? I think she might have. Yeah, I think she might have just posted it twice. So it looks like a lot here, but it's just these two butterflies. One for 409 to 417, and the other from 404 to 396. So yeah, and then you can see that she completed the trade there. So yeah, you're paying for the call side and for the put side. So basically, if it pulls back, remember she was talking about if it pulls back overnight or in the morning, right? So if I go to the SPY here, basically as long as it moves, we can make money. So I'm going to the daily. Maybe I should go to like the 2 hour. And so it basically, if it pulls back, then we can make money, or if it goes up, then we can make money. And so that's where basically those two butterflies allow you to do that. And then the new thing, brand new here, this is a QR code. So this is for the lifetime subscription. So just to clarify again, right now for the first time ever, and this price is only good for this weekend, the $39.97 lifetime, it will go up. It will go back up to $7,000 But this weekend only is $39.97 for life. And then with Klarna, if you just scan that to pay, or shoot me an email, I can send you a link, and that way it's just as low as $170 a month for lifetime access to Benzinga Pro. And Esther says, got filled at the calls. The put side has gone up already. Yeah, so that's why you can see that, many times the thesis still stands. So even if you don't get in right away, like I didn't get in right away on, I think it was DBA. I still believed in the thesis. So I think I got in, where was it? It was wheat. I did pretty well with DBA, but I think it was wheat where I kind of missed the first part of the trade, and I had to pay like 5 cents more for wheat, but I'm still in that because overall I believed in the thesis, and it's through October. So, and the goal was to make like 100 to 200%. So I was willing to risk the extra $5. All right. I really hope that this was helpful for all of you. Let me know if you have more questions, like how to execute these trades. But like I have this on my phone right now. If you don't have an account already, get access through. There's a whole bunch of different brokerages. I'm on Thinkorswim, and so is Anne-Marie. But I can do all this like on my phone. I could open up one option and use a paper trading account first, because it's you just want to get used to how to execute the trades. But I like it a lot, and so it's easy peasy. All right, so let me know. Go ahead and throw something in the chat if you just joined. I want to welcome everyone who just joined. I'm checking my my stream here for all the new members. Awesome. Welcome, David. Glad to have you join us. Matthew, awesome. Glad to have Matthew on board. Jason, Benjamin, fantastic. Vincent, I talked with Vincent on the phone. Perfect. Nasky and I talked on the phone today. So it makes sense to put also last week trades if they are long enough. Yeah, definitely take a look, Nasky. Like you have to look at the expiration dates and the prices, right? So like that kind of speaks for itself. Oh, right here, new RRC, right here. Buy to open, 5 $35 calls. So this is another butterfly for RRC. This is the one we were talking about. So right now, actually, I'm gonna zoom in on this for all of you. I'm taking this trade right now, live. So I'm going to my Thinkorswim app, canceling the other thing that I had open. Going to RRC option chain, and then I'm going to choose September expirations, so September 16th, and then I'm going to go down to the $35 calls. So it says buy to open, so I'll do it at the ask. So ask $35 calls, 5 of those, add option leg, and then I'm gonna sell 10 $40 calls. There we go. And then I'm going to buy 5 $45 calls. Done. Just double checking. Oh, that's why I double checked. Because I want to do 10 of I want to sell 10, not 5 of the middle one. There we go. So then 73-cent debit. There we go. So if you do it exactly like this, it says 73-cent debit, but you multiply that times 5. So then for me, the cost of this trade right now is already up to 78 cents. So review, send, order sent. It's working right now. So that's how I did it. Hopefully, I mean, I know you couldn't see my, phone, but that's buy to open 5, sell to open 10, buy to open 5, 73-cent debit. That's for one of these, but then you multiply that times 5, and that's your actual cost. And also notice how she said leave it in the queue if it does not fill. So that's the important part of a limit order. So you can actually change the limit when you're executing these. You can tell it, okay, so the market is at 78 cents. Let's say the price went up and now it's at 78 cents. You can manually change that on your brokerage to 73 cents and say, don't execute this until it comes back down to 73 cents. So that's key there, because that saves you like 25 bucks on your entry there. All right, next. Yeah, 2 trades. Let's go. And then make sure that you also have good till cancel. You don't want to pay more than you need to. Be patient. So this is key. So you just leave it in the queue. Good till cancel, because you want to wait for the price to come in to you. She identified this as a good price for the butterfly. And she's just explaining this here. So this is the same, this RRC butterfly, she just split it into 2 verticals. So see how this is just 2 vertical spreads, but when you jam them together, the sell to open, it's the same strike. So that's how you get the sell to open 10. All right, Esther. Esther's in with the SPY puts. Fantastic. Yeah, Noman, how will we close these again tomorrow? So you just log into Benzinga Pro, and she'll tell you based off of which direction the price is going, to what to do. But then on your brokerage account, usually if you click on your open positions, there will be an option to close the trade. And so basically just to execute the opposite of what you did before. So either it'll probably just be like close trade, or if you just wanted to close one half of the butterfly, then you do the opposite of that half. So instead of sell to open, it would be buy to close. And instead of buy to open, it would be sell to close, because you just turn it around and do the opposite. Cool. And what I want to do too is for people who are subscribed, I want to go live on video and even just show you guys how to do this live on a brokerage account. And keep in mind, Anne-Marie is doing this with her own money. So this isn't just hypothetical stuff. She believes in these trades enough to do it with her own money. And so you have that to rely on in addition to all the education that she gives. You can expect a couple webinars a week like this as a part of the program, and learn how to play Moneyball. Some of some of the other webinars have been called Moneyball, trade options confidently with a safety net. That's the whole idea here. Learn how to have a safety net in your trades, learn as you go, make money, have fun, and really learn how to trade like a professional with reliable rules. All right. Yeah, you still got the QR code there for the lifetime subscription. Let me know if you need a combination. I can do this with any of the inner circle chats. I can do this with Benzinga Pro and the newsletters, whatever your heart desires as far as Benzinga goes. Okay. If you guys don't have anything else, I think I have a bunch of people asking for help in my email inbox. Welcome. Let's see, who is that? Julian and Jesus. Awesome. Glad to have you on board. Okay. These deals are only good through Monday. I'm working all weekend. So if you have any questions, if you need to test anything, let me know and we can get your questions answered. Also, there's this great help site from Benzinga Pro. Once you're in here, you have this question mark in the upper right corner. You can click on that. We have a whole library of tutorial videos. So if you're a beginner, this is a great place to start. And we have a support team as well. Strategy outlines, options, mentorship, tutorial videos. So what's a spread? What's an iron condor? We'll be posting a lot more stuff in here. And then we have a world-class support team. So of course you have me. I kind of teach people how to do stuff before they purchase. You know, I'm a glorified sales guy, but hopefully you're learning a lot. And then you can access my team or the support team through this blue bubble in the bottom right corner. You just send us a message and they're very responsive. So you can get technical support there, as well as leaning on other Benzinga Pro members in these various chat rooms. All right, someone's in on Bitcoin. And then, thank you, Nancy. All right, fantastic, Nancy. Yeah, just shoot me an email or give me a call and we can figure out whatever's best for you. Okay, I'm gonna go ahead and get off of here. I'm gonna make sure that I execute these correctly. And I will see all of you in the chat room and we'll probably talk with some of you on the phone. So I'll just leave this up for anyone who needs it. And actually, I'm gonna turn on some music too. If any of you need trading music, Benzinga actually just, let's see here, Benzinga Lo-Fi. There we go. Got some music going. Good to go. Gonna make sure that I hear the sound. Yep, we're good. Okay. All right, talk to y'all later. Have a great afternoon, and we'll be in touch. Take care.